In this video, we will have an update on Vaxart to see where things are now and if you should buy its shares. A few days ago, the share price of Vaxart took a huge tumble from its peak in the $20 levels down to around $8 now. The massive price correction is caused by the results of their phase 1 vaccine. The vaccine did not generate the number of antibiotics expected, and this was interpreted by the market as a failure to develop a meaningful vaccine, which can explain in most part the subsequent reaction in the stock market. With that being said, after digging around some more in the announcements and its interpretations, I believe it is necessary to post this update and to bring some much needed nuance to my previous video. First of all, it is important to remember that the stock market fell because of these interpretations of the results. What analysts focused on was the absence of significant increase of antibiotics when vaccine was administered to test subjects. However, there have been some articles and people on different forums voicing a different opinion that has been largely ignored by the mainstream media and by, I would say, most shareholders of Vaxart. The full details can be a little bit dry and technical, but the gist goes like this. The vaccines that are being administered orally trigger different reactions from the body compared to the conventional vaccines. Also, the absence of antibiotics for airborne viruses should not be the only or even the most important benchmark of its efficiency. In other words, the results from phase 1 should not have triggered the massive reaction that it did, because if we only focus on the medical facts, those results may be normal for this kind of virus, especially when its vaccine is administered orally. The conclusion of those articles and voiced opinions is the same. Vaxart may be on something that is more significant and promising than the market is willing to credit it for. This means that the price collapse that we are currently witnessing should be an overreaction that will correct itself. Another example of this overreaction includes the market collapse back in March of 2020. At this point, most stocks around the world were in free fall, and many major blue chip companies saw their stock value dwindle by historic proportions. At that time, even oil futures went into the negative territory for a time. GameStop, that company that recently created a lot of headlines in the stock market, was predicted to not be able to survive this crisis by people on Reddit. Then things began to reverse back in almost the same proportions than what happened when they were falling. That period of time also proved to be an excellent entry point for most stocks and to build a balanced portfolio. This was, of course, before the frenzy of the EVs. My point is, when people have an opinion, it is sometimes a photo taken at a specific time of the reality perceived in that instant. It does not mean that it has to be the truth carved in stone. Few things about the market ever are. The reality of this one instant can quickly reverse back in later periods, over a few weeks or a few months. And this is the nature of the market. Essentially, what I mean by all this is that there are currently two camps of people having opposite opinions on Vaxart and how to interpret its results. There are two very important things to consider in this case. The first is the significance of facts versus opinions. The second one is risk. There may be one universal truth for the results published by Vaxart. For the sake of argument, let's say that those who say that Vaxart vaccine is actually efficient, but we just don't see it, are right, and that the mainstream media has been wrong. This is not, after all, the first time that this is the case. So What does it mean for the stock? The true answer is, there is only a possibility that it will reverse back to where it was. The stock market does not only trade based on facts. In fact, I would argue that facts have just been one of the many elements influencing stock price, historically speaking. The other two major elements are opinions and sentiments. People are far more likely to follow their own interpretation of the facts, in other words, their guts, rather than pursuing the facts themselves. Because maybe they do not see a difference between the two, and maybe they don't want to bother either. But regardless of why that is the case, the current reality is that when traders push the button to trade, whether to buy or sell, only a portion of the decision-making is based on the empirical data. The rest is based on their gut feeling and where the wind blows. When the market overwhelmingly interprets the results from Vaxart as negative, this interpretation then triggered a price collapse of more than 60%. Whether the counter-argument can flip the situation downside up is a hypothetical at this point and should not be taken for granted. The second element to point out is the importance of having a balanced portfolio that is adjusted to the risk of each individual positions. When reading the comments down in my previous video and under some other people's coverage of Vaxart, my feeling is that many retail investors had a modest sum of capital overall, maybe totaling a few hundreds or a few thousands. And then they dumped their entire portfolio in 2 or 3 penny stocks, because a lot of people were covering them, putting little rockets on their YouTube thumbnails or Reddit titles. When they are put in the situations to hold the bag, they want to look at every ounce of confirmation and analysis that says, yes, they're right doing so. The stock will not go lower, it'll reverse soon. Does this mean that fundamentally their opinions were wrong? Or that they did not do enough due diligence? Not necessarily. They may be right in the philosophy of things, and that their due diligence was actually very good. However, one major misstep was the risk control. A stock like Vaxart should be treated as a speculative element in any portfolio. That means that the exposure to the stock should be limited in a way so that even if positions go very sour, it should not hurt the entire portfolio as a result. Before we move on to my recommendation, if you like my content, please like, comment, and subscribe to my channel for more stock analysis videos. My recommendation is to have an exposure in Vaxart, and that the current price level is a good entry point. I believe that Vaxart's technology has a promising future ahead of it. Oral vaccines can be a real game changer. It allows Vaxart to generate a huge amount of income without having to invest in the manufacturing and marketing capacity of the pharma giants in order to profit. It simply needs to license its technology and collect the royalties. I believe that a positive interpretation of the Phase 1 results does have the same valid points, but I'm not competent enough to determine if those arguments are completely valid, scientifically speaking. With that being said, I think that the upcoming results for Phase 2 and 3 may have some good surprises for us, assuming that this interpretation is actually correct. By the way, I simply believe that the probability of a positive Phase 2 and 3 results is significant. I do not know if it is probable, meaning more possible than not. That should not matter too much when positioning my position, because it'll be priced in as a consequence. So I would recommend keeping at least 35 to 50% of your position in Vaxart for long-term holding and not swing trades, to see if the oral vaccine technology has a promising future ahead of it, a few months or years from now. Keep in mind that the stock is currently considered as a speculative play, so it should be limited to 1 to 2% of your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.